Hey guys and girls, it's Nathan here from the B.Invested headquarters today. Just want to reach out and talk a little bit about a question I often ask, units versus houses. What is better? A lot of people think that houses are better. I think that they all have their own pros and cons, and I want to debunk and look at some of the theories that are out there and break it down with you guys today. So out of my portfolio, over 200 properties, probably 50% of them would be townhouse unit villa, probably another 25% would be houses, and then another 25% would be land banking, motels, shopping centres, agricultural land, development sites, whatnot. So what is the difference between units and houses? Everyone says this is the biggest one, is strata versus redevelop. Gotta love my handwriting, guys, gotta love my handwriting. I never got my pen license at school, but you know. With it, a lot of people think, well, you've got to pay strata with a unit. However, let's assume that a strata is $2,500 per annum. That could be broken down into $50 per week. A lot of people think, you know, why do you want to buy a unit when you're going to pay an extra $50 a week? What we haven't looked at here is with the house, you have building insurance. What would building insurance be? Let's say $1,500 per annum. That's $30 per week. What else do we have? We have got land tax. Well, we'll say fuck land tax. That's right. Fuck stealing my money. Communist fucks. But anyway, land tax. When you've got units, you still have land tax. However, if you've got a block with of land that's worth 1 million, if you've chopped it up into, you know, let's say there's 10 units on site, you would pay 1/10 of that million. That would be 100K. If you had a block of 20, you would pay 50K worth of stamp duty, of land tax, sorry. So your land tax on this property here might be $50,000 towards your threshold for the year. However, if you were to buy a house and the house's land value is worth $500,000, then you're paying land tax on $500,000 per annum. So what would the rate be? Let's say it's at 1.6%, which on 500 grand would be about 7,500 per annum. On 50 grand would be about 750 bucks. So units do have a role to play in your portfolio. What about the upside for capital growth? Right? Let's take this off. Let's look at, so strata is a big issue. People are saying, you know, you've got to pay strata for property. A lot of people don't realize you've got to pay building insurance. The strata covers the building insurance inside of its component. What about you know, growth, right? Houses will go up more than units. Well, let's say we've got, and this is real examples of my own personal portfolio from 15 years ago. Let's say we've got somewhere like Balcombe Hills. A house was $500,000, and today it'll be worth, say, 1.2 million. It's gone up. It's cool, right? At the time of purchasing, interest rates at 9%, rent at $350 per week. That is negative. Let's just look at that. It's 45K per annum. It's 18 grand a year. We've got 27K. What a good human calculator I am. Was it correct? 15, 2, 20, yeah, 45. So 27 grand negative. Divided by 52 would have been 27 negative divided by 52 would be about 500. Let's just say $500 per week, just for the fun of it. That property would have cost negative $500 a week to hold, and it would have been a 500 grand property. That would have turned from 500 to 1.2. At the same token, I could have picked up a property for 120K in Mount Druitt. A lot of people ask me, Nathan, why did you buy properties out of Mount Druitt, right? Oh, you must have grew up in Mount Druitt. There's nothing wrong with people in Mount Druitt. There is for some of them, but with it, I didn't grow up in Mount Druitt. I invested in Mount Druitt and I saw the opportunity. So with it, 120,000 purchase price. Those properties today, 400K. So that property's gone up 3 times. This one's gone up 1 and a bit times, 1.2 times, roughly. So you could have, this gone up 2 times, sorry. So it's double, go to a mil, plus a bit extra. This one here, 120, if it tripled, it would be 360. At 400 grand, it's gone up 3 times. So looking at that, and that 120K at a 9% interest rate at the time, that property would have been, say, 10K per annum, just roughly, in interest. At a rent of $180 per week, that property would be negative maybe 2K per annum, right? So I've got a property that's negative 2 grand per year or a negative 27 grand per year. I could have held 10 of these properties, which would be 1.2 mil, which doubled into 4 mil, or tripled, or whatever you want to call it. So it's, we've had 10 of them, 1.2 mil, 120 to 400, 1.2 to 4 mil. I could have held one of these properties that's turned from 500 to 1.2 mil. So my net result on that occasion would mean that I'd make here $2.8 million. My net result on this one here would be that I would make $700,000. The other part that we didn't realise in this equation is that these rents at $180 per week have gone up to $350 per week. So that property that was costing me 2 grand per year or 20K per annum is now positive. Let's work these numbers backwards. So we've got 18K minus 10K, but the interest rates went down, but let's just assume that the interest rate's still 9%, okay? So 8K times it by 10 equals $80,000 per annum positive cash flow now. This one here has gone from $350 a week to say $700 per week. $700 a week times it by 52 is about 37K per annum. That thing, leaving the interest rate still at the 45 grand per year, would still be negative. So the strength comes in numbers by having the right assets and taking through a market cycle. For me, I have, as I said beforehand, about 50% of my portfolio is units, 25% houses. I always use the word property. When I talk about things, I talk about properties, not about houses, not about units, because it all comes down to having the right vehicle. The property is purely the vehicle to get you from where you are to where you want to be. Ultimately, I would love to have 100% houses, better yet, 100% acreages with blocks of units placed on it. But reality is what is most affordable for you to be able to build that portfolio out. For me, I have a lot of people asking me, for me, I just want to I want to get to the end position, which is the financial position. When I have a lot of people ask me, so you can have a last quick look at these numbers before I remove them. A lot of people talk to me about the potential of redevelopment of a property, and they buy this house, right? And let's assume that you're buying a house over a unit, and you go, okay, we've got this ugly property which is negative cash flow. I don't even know why I wrote this off because I need to bring these numbers back. You've got this property here, and you go, okay, well, I can add a granny flat on it, right? Cool, we're gonna add a granny flat. How much is a granny flat gonna cost you? Oh, a granny flat might cost me 100K. My granny flat might cost me 130K. Lucky I'm much better with my numbers than what I am with drawing, guys, but 130K. For $130,000, what's that gonna rent for? What, $300 per week? And what's going to happen to the value of your property? It's going to go from your 1.2 mil now in 2020 all the way to 1.3 mil. And you're going to lose value from your original dwelling because you're not going to be able to get the same rental return on it. And that property ain't going to go up extra because you've added a granny flat. For the same $130,000, you could come over here and buy a property for 130K. As I always talk about, I pick up properties in 2020. Cheapest one I bought this year was $15,000 for someone. Average properties in Brisbane, 150, 140. In other capital cities, you can pick up properties for that price. If you pick up a property for 130K, you have a whole new asset, and then you also have leverage. Because if you're buying this building, this granny flat cash for $130,000, or if you're buying this asset for $130,000, you could possibly put down a 20% deposit, which 20% deposit on that is 26K, plus closing costs, maybe another 10K, let's just call it that. That's 36K. You can have a whole new asset that has the ability to go up instead of just overcapitalizing on that same one. So when people say, I want to buy a house, I want to, potentially redevelop it one day, maybe build a granny flat on it, whatever the case may be, my strategy ain't hopefully, potentially, maybe one day. It's how the fuck am I going to get to financial freedom and get to my end goal of where I'm trying to get to using that vehicle. So for me, is strata fee worth it? I'd prefer not to. I'd prefer not to pay insurances. I'd prefer not to pay for land taxes. I'd prefer not to pay for a lot of things in life. But the opportunity cost, this is my real bottom line number here, right? You can say, okay, house, number one thing it has is it has redevelopment potential. Unit, you've got strata fees. That looks like a negative, right? If I can hold, let's say I could buy 10 of these houses 20 years ago at 500K a piece, right? 500K a piece, times it by 10 would be impossible, because if someone was negative $47,000, $45,000 a year just on their interest repayment, you'd be up shit creek. But anyway, let's say that you bought 10 and you had 5 mil turn into 10 mil. Or in my example here, where I could have 10 of them beforehand, which would be 1.2. These numbers aren't really going to work out, guys, but ultimately, let's take this one back. Let's go back a step, guys. Let's go back a step, right? The reality of it is let's say you want to have 500K turn into 1 mil, the market doubles, or do you want to have 3 mil worth of asset, which turns into 6 mil if the market was to double, right? Reality is that if you could hold the same amount of holding, 1 to 2 of these, if you could, or if you could hold 10 to 15 of these ones, there's a big difference why people own 1 or 2 properties or 10 or 20 properties in their portfolios. For me, I'm all about net worth and I'm all about the cash flow. So ultimately, at the end of the day, we have redevelopment potential, maybe one day, an opportunity, or we have cash flow, net worth, position, and we have an asset base. So when a lot of people look at potential redevelopment, potentially I could redevelop it, maybe one day I can do something with it, one day I can build that, there's an opportunity, right? For me here, sure, it's got a strata, right? Cash flow is strong, yes. Net worth position, I'm building out a bigger asset base, and just back to the asset base. So if you want to know my views and opinions, as I said, probably 50% here, 25% here, and 25% in other forms of real estate assets in my portfolio. If you need help on building out that strategy, looking at the pros and cons and whatnot, feel free to reach out to my team. Email us at admin@binvested.com.au or call us at 1300 367 925. Thanks for watching, guys. Have a great day. Bye for now.